Good morning, everyone, and I hope you're having a great day. So, today, what I want to do is start part one of our three-part series on holding companies. So, I've written a very popular article called How Small Businesses Can Use Holding Companies to Save Tax. And what I thought I'd do is I'd just create a three mini series of videos to actually accompany that so that people who'd rather watch a video than actually read the article can do that. One thing I'd say, though, is if you want to see the other parts of this video and you might just come across us on YouTube, then go to our website or just Google how small businesses can use holding companies to save tax. And the article I wrote will come up, and then you'll be able to just see all the other videos linked to that article there. Before I go into that, let's talk about three parts I'm going to do. The first part is about the benefits of a holding company, so why people actually want to set one up in the first place, and also a little bit about what a holding company is. The second part is all about the tax involved, the tax savings and the disadvantages involved in a holding company. And then the third part is actually about setting up a holding company. So you may find all three parts of this useful, but what I've done is decide to split it down into three parts just to make it easier to consume. But all the parts are on our website, as I mentioned. So let's go straight into it. Why do people want to set up a holding company, and what are they? Realistically, you get three main types of company if you're a small business. You get your main trading company. So this is the company you sell stuff from, you buy stuff through, it makes a profit. And then the second type of company you get is what you call SPV. This is a special purpose vehicle. This is the type of company you might set up just to buy property or to do a certain project, quite often with the intention to close it down once you're done, or maybe at least to just separate out investment activities from your main trading business, because investment activities come under a different tax regime, and mixing them with the main trading business can create a lot of complications, not just in tax, but also in terms of risk and borrowing money from banks, for example. So that's the second type of company, the SPV. And the third kind of company that you're likely to come across is a holding company. So a holding company is different to an SPV or a trading company because the only purpose of the holding company is to hold stuff. It's not meant to be buying stuff. It's not meant to be selling stuff. And actually, there's some disadvantages if you do that through a holding company. But the holding company holds things like shares in other companies that you might own or may not be the majority shareholder of. It holds things like other assets, like it could even hold property, for example, if you needed it protected, but you weren't specifically running it as a business. And it can also hold other equipment and assets. And most importantly, cash. Holding companies can hold cash. And that can be very important, which I'll go into now. Let's talk about what would happen if your main trading business went bust. Let's say you got knocked for a job and you'd had a load of outlay in terms of costs, but then the customer never paid you. Well, your business might end up insolvent if it didn't have enough in reserves, or if it had enough in reserves, the money that you lost might have to come out of those reserves, which you may not want to happen. You'd rather it went bust and you could just walk away, because those reserves are the wealth you built up over time. Why should you pay a long-term price for one thing that went wrong, which might have been outside of your control? So the idea behind the holding company is all the really valuable stuff like the cash balances, any commercial property that you've got that's related to your main trading business, you can actually separate out into that holding company. So then if the worst thing happens to your main trading business, then all that equipment and stuff is still in the holding company and it's protected, and the creditors that you owe money to in your main trading business can't touch that. So it's almost like you've banked it if you're watching The Weakest Link, and then if something did go wrong, you can start over again or do something different because you've got all those assets protected. So that's the first main reason why people actually use holding companies. It's to protect their assets. But the second reason people use holding companies is actually a bit more clever and requires a bit of tax planning, especially with accountants. But the second reason is, well, quite often they need flexibility. Imagine this. Let's say you had a partner in business who isn't a family member and you were both 50-50 shareholders of that business. the business could make a profit of £200,000, and your partner might say, okay, I want my share of the profit. I want 100,000 paid to me in dividends. I'm talking about profit after tax. And you might say, hang on a minute, I don't want 100K in dividends right now because I'm going to pay a load of higher rate tax on it. That's not tax efficient for me. I'll lose my personal allowance because I've got other forms of income as well. So you'll end up in a standoff with that business partner, and where one of you will have to compromise. One of you will either have to take less than they want to, or the other one will have to take more than they want to. And that can be circumvented by actually having a holding company, because when you have a holding company, money can be paid into those holding companies as tax-free dividends. And what that means is, if your business partner wants 100K out of that company that you own, the trading company can pay 100K of dividends up to their holding company, and then they can take the 100K of dividends out of their holding company for themselves, and they can pay whatever tax they want to pay on it. You, on the other hand, you don't have a reason to object anymore, because you can have 100K of tax-free dividends paid into your holding company, and then you can choose to only take £40,000 out and leave the other 60 in the holding company. So that's the second main reason people go for the holding company, because it gives them a certain degree of flexibility. The third reason is tax savings, but I'm going to go into the tax savings in the next video. But one other thing I would say is, if you've got an SPV because you want to do some property investment, rental properties, that kind of thing, and you've got your main trading business, you might ask the question, why do I need a holding company? I can just lend money directly from my trading business to the SPV for that rental property, so it can put it down as a deposit on those rental properties. The answer to this is yes, you could absolutely do that. Intercompany loans are tax-free. It's not, you don't get taxes if you've taken money out of the business. You don't pay dividend tax on it. They are tax-free. However, let's say something happened to your main trading company. That loan is a liability for your SPV, but it is an asset for your main trading company. If something went wrong with your main trading company and you had to close it down, or it went into liquidation, that loan can be recovered as an asset or sold on, because it has resale value. So by moving money up to your holding company and then loaning it down to your SPV, what you're essentially doing is you are cutting that risk out, because even if something went wrong with your main trading company, you would still be in a position where that loan was actually assigned to your holding company, and the creditors of your trading company couldn't touch that loan. So there's a lot of information here. You probably understand why I did it as a 3-part series now. And what I'll do is I'll get into the next part soon. But remember, if you are on YouTube and you don't know where the other parts are, I'll probably create a separate playlist for this anyway, but also definitely just check out our website, accounting, and then go to articles, and it's there, or just Google how small businesses can use holding companies to save tax, and it should come up number 1. And I'll see you at the next video.